Hi guys, welcome to today's webinar. I'm going to give it a few more minutes, a couple more minutes to let everyone log on and get ready, and I'll be back. All right, let's go ahead and get started. First off, I want to let you know that there is a question box, so feel free to type in any questions as we go. And if for some reason I don't know the answer, I will always shoot you an email afterwards after I find out what the answer is. Okay, let's see here. Make sure I'm sharing my screen with you so that everyone can see. Alrighty, so quick agenda. I'm going to touch on a couple softwares that we do have here at Covisum. I'm going to show you some helpful resources that will be of value to you once you are into the software, whether you're in a free trial or if you are a new subscriber to us. I like to touch on those. So let's go ahead and just jump right into it. So Covisum is our homepage, so if you go to covisum.com, this is where you're going to find the different software that we have to offer. And I want to let you know what Covisum stands for. So Covisum literally means shared vision. So we create a shared vision between our software through for your clients through training and support. So that is what the meaning of Covisum means. And we do offer 3 different softwares. So we offer Tax Clarity, Social Security Timing, and Smart Risk. We do offer a bundling pricing if you purchase all 3 softwares, or if you're going to just purchase one software, there's a price of $49.99 a month. There's no commitment with that, and it's pay as you go. So each month we'll bill your credit card, or if you know that you're going to stick with us for a year, you can pay annually and you can get 2 months for free. Okay, if you purchase all 3, it's $120. Otherwise, it is $1,200 for the annual. All right, so we're going to go over Tax Clarity today. We do offer Social Security Timing. So this was our first software that we launched with Covisum. It shows how the timing of their Social Security claiming decision can cost them or save them thousands of dollars. So with all of our softwares, it comes with easy charts for the clients and for you to be able to explain them what's going on with their current situation, whether it's in regards to Social Security, whether it's taxes, or if it's with risk. Okay. Our Smart Risk software, we launched this a few months ago, and it was designed specifically for financial advisors to help you set proper downside expectations with your clients' portfolios. So if you use any other risk software out there, we use a completely different algorithm when it comes to how we determine risk. So feel free to take a 10-day free trial on this and pop in some of your own models and kind of see how they stand in our risk metrics. Okay, but we're all here today for Tax Clarity. And one other thing I want to mention is our blog. So it's going to keep you up to date on what we're doing here at Covisum. So any updates, anything that we add into the software, any kind of new laws that are passed, like the new tax law, everything is going to keep you up to date here. So all you got to simply do is enter in your email address and subscribe. So also any resources that are available, any kind of case stories that it was working for other advisors, we'll always post this on here as well. Okay, so now I want to just jump into Tax Clarity. So Tax Clarity software calculates a client's effective marginal rate. So it's going to help you identify dangerous points or one additional dollar of income can push that client into a much higher tax bracket. So we have an easy to understand tax map that keeps the prospects and clients engaged so that they understand the value of working with you, so that you can help them carefully plan their retirement income, manage withdrawals, and also minimize as much taxes as possible. Okay, we do have a process here when it comes to Covisum. So start a 10-day free trial. So most of you guys are in that first step. If you like the trial and our support that comes along with it, you do, the next step would be becoming a subscriber, and then our ongoing support comes with that. Also, as a full subscriber, you're going to get access to a lot of our marketing tools, and I'll touch on those, what comes with the software as you're a full subscriber. And then also just being able to learn different softwares and be able to take all that stuff to the public. Okay, so when you first get logged into Tax Clarity, I want to show you a couple things that a lot of people might miss if they're in the free trial. So up in the Settings tab, you're going to find a lot of helpful resources. So we have some training videos. So if you don't have a tax background and you want to get up to speed on what's going on and the basics of taxes, these three top videos are going to help you get up to speed on that. Okay. Also, we provide you a prospecting with Tax Clarity. So how to gain prospects and how to use this as a prospecting tool, but also to close those deals with those clients. We also have another tutorial video down here as well. So if you need a little bit more additional training or a refresher, always watch that tutorial. And then as a full subscriber, you're going to get full access to all the marketing materials. And yes, they have all been updated with the new tax law. So we give you a PowerPoint presentation so that you can do those at webinar or for seminars. We also provide you with a brochure. So this client-facing brochure, some advisors like to hand that out at the seminar, and some advisors like to hand them out during their client service meetings. So either way, that does come with it. Cpa Intro Letter. So we created this letter so that you can help build those relationships with your client CPAs and be able to introduce yourself and introduce the software, and so that they understand where those calculations are coming from and why you use it. Same thing with our customizable white paper. So if you haven't yet, we do have a great white paper on Tax Clarity on what is tax advice versus not tax advice. So you can click on that and or send that to the CPA along with that CPA intro letter. Now, all of this stuff is you can customize it and update all of your contact information, all of your logo, any other custom disclosures once you're a full subscriber, along with the report. So Tax Clarity does come with the report. You'll be able to add all of your PDF branding to that as well once you're a full subscriber. So we do give you a marketing plan. So the marketing plan really is to keep you organized and help you keep growing. So really putting a budget in place, trying to figure out how, what your ROI is, and how many, typically it only takes one client for Tax Clarity to pay for itself for the whole year. So kind of keep that in mind as well. Okay. And then we also are going to give you a quick video on it's Joe Elsasser, our president. He owns his own IRA here, and he actually goes through and uses this PowerPoint presentation for one of his seminars that he does. So this is just him giving that video to you guys and how he uses it. Alrighty. So now that I went over all this stuff that comes with it, I want to go back and show you what it does. So getting started. So this pop-up is always going to pop up to let you know what you're going to need. So for tax clarity, what you're going to need the client's 1040. If they have any Scheduled A's or Scheduled D's, you will need that information as well. And that's pretty much it. You're going to need the client's first name, last name, and date of birth. Okay. And we have set this up to align what's on the 1040. So if we look down at our income sources, you're going to see that we have our earned income 1040 line 7, our pensions 1040 line 16B. So really it just helps you follow along and find that as quickly as possible. All right. All right, so it takes anywhere about 3 to 5 minutes to, if you have that client's tax return sitting in front of you. Again, you'll need the 1040 and if they have a Schedule A or Schedule D. And as you're importing this, so I'm going to do a couple different things. So I'm going to run a report without the new tax law. A lot of advisors that are using our software right now are running one report, how it would be in 2017 without the new tax law, and then what it would be in 2018 with the new tax law applied, so that the client can see the two different reports and how they're going to what's the difference there. Okay. So I'm going to quickly go through here. I'm going to pull up a client that I've already inputted, and then also one other thing I want to mention before moving forward, because this will come up. A lot of questions do come up about this. So in our ordinary income, you're going to see that there's a little question mark. So if you hover over that question mark, it is going to tell you what you will have to do a little bit adding. So it does tell you what lines you do need to add up. Same thing with your long-term capital gains. If they don't have a Schedule D, then they can find it on the 1040. Okay, so always take note if there's any little question marks, make sure that you're adding up the right numbers. And when you are putting these in, don't put any decimals, commas, or dollar signs. Just enter it in as you see it on the form. Okay, and these are all set up as presentation tools. So if you do have that client sitting in front of you and you do want to input their information, you can. We do hide all of your clients, so they won't be able to see any of that. Okay, so I'm going to pull up this case here. It looks like this one was updated on 12/15, so that had to have been the old tax law here. Okay. I'm going to show you what I have in for this couple. So I'm going to go up here and I'm going to click on Input Data to see what we have. So you can see I have a Mr. and a Mrs. I have the tax year that they are filing and their date of birth and their filing status. So they're married filing jointly. Okay, with their income sources. I don't have any earned income. They don't have any long-term capital gains. As of right now, they're only taking a combined total of $50,000 with Social Security. So what does that look like on a tax map for them? So this is going to provide you a landscape view of what your client's tax situation is. So you can help them suggest different alternative patterns when it comes to different withdrawals or contributions in retirement accounts. So let's take a look at this. All right, so we're looking at our map here. And you can see we have our dot down here at $0, our income source of $50,000, $0 in taxes, and a 0% effective rate. And the reason being is because there are no because Social Security standalone isn't taxable, okay? So there's a couple ways of doing this. Some advisors like to plug in what they're currently taking out. Maybe the client is coming in and they're saying, hey, we're taking this, we're already taking this amount out, and we're going to remodel our kitchen, so we need to take out $15,000. This is where you can help that client plan on different harvesting strategies and how to help them manage their withdrawals so they can avoid these pitfalls. Okay, so I'm going to go over what this map what it's saying now, and then I'm going to build a scenario so that you can see what happens to their tax situation. So I'm going to take this gray area away so you can see. Now remember, this is on our old, I'm going to show you the old tax law, or the old tax brackets, and then I'll add in the new tax law. So for this particular client, they can take up to $21,750 of ordinary income before they start to, hit these pitfalls. So we have our 10%, our 15%, and our 25%. But what happens, since we have these couples are already starting to take some of their Social Security, is our effective marginal rate. So that's that gray shaded area. Our gray shaded area is one of the reasons that they're going to experience this gray area is because of that provisional formula. So once they start to take enough Social Security and they take enough of ordinary income, it's going to push some of those dollars to be taxed on both of those. So not only are they going to be taxed on some of their Social Security, but they're also going to be taxed on some of their ordinary income. So before, if they weren't taking out any Social Security, they could take up to $21,750. But since they have $50,000 in Social Security, they're actually going to start to see that tax increase after, they can take about $16,750 before they hit that first threshold. Okay. So I'm going to just go in here and I'm going to add in some money in here so that you can see what happens with what happens. So let's do, I'm going to add in some long-term capital gains. So I can always click this advanced button and I can scroll down here, find our capital gains section. I'm going to say they inherited $15,000 in long-term capital gains. Save that, go back up to the top here and pull it up so you can see it. So it's going to give us the breakdown. So we have our originally $50,000, $65,000 total now, an additional $15,000, but we're not being affected by this tax situation yet because we haven't reached this gray shaded area. Again, one of the reasons for this gray shaded area is because of the provisional income formula. Another could be they've hit certain thresholds on their long-term capital gains. So they've taken out some capital gains, they've taken out some Social Security. Now they have about $10,000 that they can utilize before they start seeing this increase. Okay, so I'm just going to say they started to take out a pension. Let's just say $30,000. What does that do to them? Okay, so you can see down here, we went from our original base case of $50,000. Now we are actually experiencing some a tax bracket. So up here, $50,000, a total of $45,000. What their net income is going to be is about $40,505. How much their total taxes and what their effective rate is going to be and what the difference is. Okay. So if we scroll down here, one of the things that you're going to want to be able to provide to that CPA, if you are working with them, is our details information. So this is one thing that doesn't pop up on the report. So if I hit this details button, it's going to go over all of those, all the different tax situations. So our base case, if we look down here, we're going to see our taxable Social Security. So again, standalone by itself, it's you're not paying any dollars in taxes. But once we've hit certain thresholds on our Social Security, that's going to make it taxable, and about $28,100 is being taxed. And then when we look at our long-term capital gains, you're going to see that before, obviously we didn't have any in there, but we've added some in, and now that's pushing our capital gains $15,000. If we scroll down here, you can see the total tax rate on what we're paying on that. Okay, so this is going to be super helpful to those CPAs, and one way that you can provide that tax landscape for your client. Okay, so if you right-click on this, you can hit the print button, and it's going to give you that full screen of that map. It's also going to give you the breakdown of the details. So again, this doesn't come on the report, so you will need to click on that print screen and print this off for them. It also allows you to add any custom disclosures to this page as well. So if there's any thing that you want to add to it, you do need to be a full subscriber to do that. So know that that's there for them as well. Okay, so that's kind of how it works. Let me go back and show you what it looks like if I were to add the new tax law in here. Okay, because that's what we're all here for. Super easy to add the new tax law in there. I'm going to go back to our income inputs here, our input data. So we have our first name, last name. The only thing you have to do is click on the tax year, so it needs to be 2018, and it automatically checks marks that box that says apply tax cuts and job acts of 2017. It's as simple as that. Now there are these brackets and thresholds, so if it is something that you want to take a look at, you can see that now if you put 2016 in here, it's going to show you the thresholds for that. Since it's 2018, you can see that we have our new thresholds, or our tax brackets, our different capital gains brackets. We did get rid of, the new tax law did get rid of the PEPs and Ps, so you can see that those are $0 there now for when it comes to thresholds and exemptions. And then the different Medicare monthly increases. Okay, so that's there for you. Go back. Okay, so if we're looking at this with the new tax law, you can see them take our effective right away. So we have our 10%, our 12%, and our 22%. So this individual, let me go back and see what we have in here for them. I think it was just $50,000. Yep, we just had the same situation as the last scenario. $50,000 of Social Security. What does that look like on a tax map? Well, on a tax map, again, standalone, it isn't taxable. This couple can take about $26,000 if they had other ordinary income. But what happens when we add that effective rate in? Well, they're going to start experiencing taxes a lot sooner than they would have if they had ordinary income. Okay, so this particular client can take anywhere from about $12,750 in ordinary income before they start to experience that next threshold of taxes, that pitfall, I should say. Okay, so pretty straightforward to the point there on how to build a case. Now you can see there are different thresholds. The best way to be able to run a report for your client is to be, and if you want to show them the differences, is to run it with 2016 without the new tax law, and then go up here and hit PDF, run that report, then go back to the input data, and then put 2018 and apply the new tax jobs, and then run a report like that. So that way they can look side by side with the two reports and be able to show them the difference when it comes to the different tax situation. Okay, so let me stop for just a second here and make sure I don't have any questions that have come through. We'll go over this one more time. Okay, so is there bundle pricing for all three softwares? There is. So if you guys get all three softwares, you will need to call me. I'll give you the bundle discount code, but you get 20% off all three products. So you'd be $120 for all three. Okay, and the reports all run smoothly with that. So if you're going to be running a report on tax clarity, it's easy to run a quick report on Social Security timing and Smart Risk. They all kind of flow together. All right, so I just want to go in here and add the same thing that we did on the other one. Okay, so I'm going to go in here, I'm going to click, I'm going to say, hey, they're going to take $30,000 in long-term capital gains. What does that look like with the new tax law versus no tax law? save, up here, go big. Okay, so same situation. They're not going to be experiencing any tax, but you can see they can only take about $6,000 when it comes to earned income. So if they take a pension of $30,000, this is the same situation. Now you can see that they're going to be land in this this bracket. So I think before it was 28% versus 22%. So those thresholds have went down, or those pitfalls have went down versus if they were to do it then. So it's really being able to have that discussion with your client, with their CPA, be able to show them what their landscape of their tax situation looks like, but also to figure out how to manage those accounts. So if they do come to you and they say, hey, I need to take out another $15,000 because we're going to take the whole family on vacation, or my daughter's getting married, whatever the case may be, you can help them and explain to them without giving tax advice, just being able to show them, hey, if you do that, you're going to experience, if you take any additional more dollars out of ordinary income, that's when they're going to start to experience this pitfall at 44.5%. Okay, and this is a lot lower than what it was before, but making sure that they understand every dollar that they pull out, they're going to be paying that, and giving them the breakdown of what their net additional income is going to be. So one of the things that come along with Tax Clarity and all of our other softwares is our awesome support. So if you have a situation, or if you have questions on the new tax law, or if maybe a client comes in and they have an odd case, you can always reach out to them, and you get full access to them and their knowledge. So it's that 1877 number up at the top, or you can always click that Help Me button, and it's going to say, are you sure you need further customer support? You're going to say, yes, please help me, and then it's going to ask you to give a call to that same phone number. And what this does is it shares the case with our support team so that they can quickly, easily access this case, and to be able to go over it with you, so that you can understand and feel confident with that client sitting in front of you and explaining it to them. Okay, so let's see here. I'm going to make sure I don't have any other questions. So Carol, I did see your question come through, and if anyone ever needs additional training or walkthroughs on any of this, as a free trial subscriber, we do set up a one-on-one with our awesome support team, so they'll actually walk you through and hold your hand through the whole process. So I can reach out to you, and we can always schedule that one-on-one as well. Okay. One other thing I want to run over is our PDF report and show you what it looks like. So again, once you're a full subscriber, you'll be able to brand all this, put your logo and all your contact info. It's going to go over the assumptions. So it's going to show you the new tax brackets. And again, if you're running this for a 2016 tax return, it's going to have the 2016 brackets in here. Okay, so you can literally go through it with your client side by side with each report and show them what the difference is. And also what the different thresholds are for the capital gains, because those have changed as well. Same thing with those Medicare monthly premiums. Those have all changed. So originally our base case, what we went over, our $50,000 standalone Social Security is not taxable. But once you start to take in enough income on your ordinary income, long-term capital gains, and enough of your Social Security after you hit those certain thresholds, this is when we're going to start experiencing that tax. So 4.5%, which is a running total of $4,932. Give them the base versus the scenario bill. It's going to show them the tax map. It's the same exact map that we just went over, except it's just not filled in. So they can see what their top marginal rate could be when it comes to taxes, and what their net marginal rate is going to be. Same thing with long-term capital gains. We do offer there is a map on here as well. So if we wanted to just strictly look at our long-term capital gains map, we do offer that up here in the right-hand corner. So you can see, since they started taking out their Social Security and some of their long-term capital gains, why this gray shaded area immediately takes into effect, because it's taking consideration, hey, you've already hit those thresholds by taking $50,000 out with Social Security. Automatically, some of your capital gains are going to be taxed. Okay, so when we look at this, I'm going to scroll back down, keep going through this. It's going to go over the base case again, and then the scenario that we built. So some advisors like to do it a couple different ways. You know, some advisors like to figure out what their overall plan is and what accounts they're going to take out, show them that way, and then also do different scenarios to figure out what the best plan is for them. Then we go over at the bottom what the importance of a plan. So which assets should be held in which type of account, how much should you withdraw from each account each year, how much money should you how much should you move from account to account? You know, basically just making sure that you drill down on these questions to make sure that you have a pretty good idea on what plan that they have and when they plan to pull some of this, pull their money out. Okay. All right, so that is the gist of it. I'm going to just hold off and make sure I don't have any more questions that come through. You know, I really just like to walk you through the software. The best thing for you to do is to get a client's 1040, plug it in, see what that looks like on a tax map, and kind of go from there. And if you have any questions, to be able to give us a call at that 1877 number, and we can make sure that we answer any new tax law information for you and what their current situation is with their taxes. Okay. If you haven't yet, read our white paper. So our white paper really goes in depth on, you know, the elephant in the room, which is taxes in retirement. You know, a lot of advisors don't like to talk about it, but it really explains how tax clarity can bring a lot of value to your practice, being able to talk about that. But also what happens when you start to take out enough capital gains, IRA withdrawals, and Social Security, and how they kind of build that snowball effect. So it's a great read, and it's a great way to add that to the CPA letter. So I'm going to pause. If anyone else has any questions, feel free to type them in the question box. Carol, I will reach out to you. And anyone that joined the call a little bit later, I know a few of you did, within the settings tab, there are some tutorial training videos. So if you don't have a tax background, feel free to get up to speed on the tax videos. And then also this prospecting with tax clarity and client service video are great videos, just first getting started. They are by Joe L. Sasser. He's the president here at Covisum, and he's a CFP and he owns his own IRA. And these videos really show how he uses tax clarity to prospect, and also in his client service meetings. So the prospecting with tax clarity and the client service are two real good videos on how to get started with tax clarity. All right. If you guys don't have any other questions, feel free to join us on Tuesday at the same time. We will go over our Social Security timing software. That was our first software that we launched. And again, they all speak to each other, and eventually we're going to, I guess, kind of to put this in the back of your guys' head too, is so we are about to add the new some new features to Tax Clarity, and once we do that, we are going to raise the price. So if you want to get locked in at that price, you'll always be grandfathered in at that price with it. So I know they're looking to add the self-employment tax, and as soon as they do that, which will be here very soon, they are going to raise it. So get locked in at $49.99 a month. Otherwise, you won't be able to lock into that. And then we do have a Smart Risk webinar, same time on Wednesday next week. So you can always register for those live demos by clicking that live demo button down at the bottom here. So if you guys don't have any other questions, feel free to reach out to us. Otherwise, I hope you guys have a great Thursday, and we'll talk to you soon.